Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Precision Optics Corporation Incorporated, and let's just say it seems like they're really trying to show us the future, or at least how they plan to navigate it, with some interesting numbers and a fresh look at who is steering the ship. Before we get into the nitty-gritty, if you like getting clear, no-nonsense breakdowns of company filings, hit that subscribe button. And don't forget, we've got a growing community over on our Discord, linked in the description below, where we dissect these reports further. Alright, so this document is an amendment to a proxy statement for Precision Optics Incorporated. Think of it as a little update to a big presentation. They're mainly just tweaking a date here. The record date for their shareholder meeting, moving it from the 28th of January 2026 to the 29th of January 2026. No big strategic shifts mentioned here, just a minor date correction. But what this really means is they are laying out the groundwork for their big annual meeting where shareholders get to weigh in on important company matters. The main event they are calling us to is the 2025 annual shareholders meeting, scheduled for Thursday, the 19th of March 2026. This is where the company lays out its performance, its plans, and asks for shareholder approval on various things. It's like the annual checkup for the company, and shareholders are the doctors. One of the key items is the election of directors. They are proposing 5 people to guide the company. These are the folks who make the big decisions. It's important to know who these people are and what they bring to the table. Take Buell G. Duncan for instance. He's 72 and has a ton of experience in tech, especially with IBM, where he held senior marketing and sales roles. He also has experience with venture capital firms and advising startups. This suggests the company is looking for strategic growth and maybe some fresh perspectives from the venture world. Then there is Joseph P. Pellegrino Jr. 61. He comes with a strong financial background, having been the chief financial officer of LeMaitre Vascular, a medical device company, for many years. He also has experience in investment banking. This really signals a focus on financial health and smart money management. And of course, Joseph N. Forkey, who is not only CEO but also president, treasurer, and a director, has been with the company since 2006, having started in scientific roles and working his way up. His deep knowledge of the company from a scientific and operational standpoint is highlighted as a key asset. They also touch upon director independence. This is super important because it means the directors are not overly tied to the company's management, making them more objective. They are stating that 4 of their directors are indeed independent, which is a good sign for good governance. They also had to disclose any related party transactions. This means any deals between the company and its directors or their close associates. They found one instance where Mr. Woodward, the chairman, was involved in a transaction with a partnership Hez associated with. They made sure to get board approval for it, and he abstained from voting, which is the right procedure. Now, let's talk about how these directors are compensated. For the fiscal year ending the 30th of June 2025, directors weren't just getting a flat fee. They received cash for their work, but also stock options. For example, Peter H. Woodward, the chairman, received a total of about $159,838. Buell G. Duncan and Joseph J. Pellegrino Jr. Newer directors, it seems, received a bit more, around $179,450 and $181,950 respectively. This includes option awards, which is a common way to align director interests with shareholders. They do well if the company does well. Moving on to the executive team, the ones running the daily operations, Dr. Joseph Forkey, the CEO, is already covered in the director section. Then we have Wayne M. Cole, the chief financial officer, who joined in mid-2023 and brings over 30 years of financial experience, primarily in medical devices. And Joseph Trott, who is the Chief Operating Officer as of October 2025, with a background in operations and technology management. It's good to see they're bringing in expertise in key areas like finance and operation. Now for the really juicy part, the compensation numbers for the top brass, for the year ending the 30th of June 2025, Dr. Joseph N. Forkey, the CEO, had a total compensation of over $1.1 million. This included a salary of about $270,359. But a significant chunk came from bonuses and option awards. Wayne M. Cole, the CFO, earned around $487,084, and Mahesh Lawand, the former COO, earned about $423,952. What is interesting here is that for 2024, their total compensations were lower. And for Dr. Forkey and Mr. Cole, the option awards were 0. This shows a clear increase in their incentive compensation in 2025, likely tied to performance or strategic initiatives. This next table is where things get really interesting. It is called Pay versus Performance. It compares what they call the total compensation, or CT, with the compensation actually paid or cap. Basically, it tries to show if the pay given to executives lines up with the company's actual performance. For 2025, Dr. Forkey's SCT was $1,106,559, but his cap was $1,034,559. This difference is mainly due to how stock options are accounted for. The total shareholder return, a measure of how the stock price performed, has been a bit of a roller coaster, showing some decreases in 2025 and 2024 after a decent showing in 2023. The company also reported net losses in 2025 and 2024. With the 2025 loss being substantial at over $5.7 million. This is a key point. Executive pay went up significantly in 2025, while the company posted a large net loss and its stock performance wasn't stellar. This is the kind of thing investors really pay attention to. Following up on that, they have Proposal 2, the Say on Pay proposal. This is where shareholders get to give their opinion in an advisory vote on how the executives are being compensated. The company is asking shareholders to approve the compensation paid to their named executive officers. They emphasize their goal is to attract and retain talent, reward performance, and align executive interests with shareholders. Given the numbers we just saw, the Say on Pay vote will be a critical indicator of how shareholders feel about the company's compensation strategy in light of its financial performance. They also provide details on their equity compensation plans. These are the programs that allow the company to grant stock options and other equity awards. As of the 30th of June 2025, there were over 1.6 million securities available for issuance under these plans. This is a common way for companies, especially in industries like tech and healthcare. To incentivize employees and executives, the weighted average exercise price for outstanding options is around $4.85. This essentially means that for these options to be profitable, the company's stock price would need to rise above this level. This section details who own significant chunks of the company. It lists major shareholders like Dolphin Offshore Partners, LP, and Needham Asset Management, LLC, as well as the company's own directors and officers. For example, Peter H. Woodward, the chairman, beneficially owns a notable percentage showing his commitment. Dr. Joseph N. Forkey, the CEO, also holds a significant stake. This ownership by insiders is often seen as a positive sign, indicating that the leadership is invested in the company's long-term success. It looks like Dr. Forkey owns over 5% of the company's stock. There is a disclosure about Section 16 of reports, which are filings required for insiders to report ownership changes. It seems most directors and officers were compliant, but there was one late filing for Wayne M. Cole, the CFO, for a report due the 2nd of April 2025, which was eventually filed in January 2026. While not a major issue, it is a small reminder that even in these filings, attention to detail is key. The audit committee, made up of Joseph P. Pellegrino Jr., Peter H. Woodward, and Andrew Michelot, oversees the company's financial reporting. They've reviewed the financials and are recommending the ratification of Stowe soon. Dagan LLC as their independent registered public accounting firm for the year ending the 30th of June 2026. They have a good relationship with this auditor, who has been working with them since 2008. Speaking of auditors, the fees paid to Stowe CAMP, Dagan LLC are broken down. For the year ending the 30th of June 2025, the total fees were around $173,746. This includes audit fees, tax fees, and some other minor fees. This is a pretty modest amount for a publicly traded company, suggesting Precision Optics Incorporated is not a massive operation, or at least in terms of its audit costs. Looking ahead, they mention that there are no shareholder proposals for the upcoming meeting. However, they do provide instructions on how shareholders can submit proposals for future meetings, with a deadline of the 5th of October 2026 for proposals in the 2026 proxy statement. This shows a commitment to shareholder engagement, at least in terms of process. And a small note on householding. This is a regulatory permission for companies to send just one set of proxy materials to households with multiple shareholders, reducing paper and mailing costs. If you want individual copies, you have to opt out. It's a practical detail that shows how companies manage these large mailings efficiently. So, what's the story here? Precision Optics Incorporated is going through its annual shareholder review. They're bringing in experienced directors with finance and strategy backgrounds. Their executive compensation saw a significant jump in 2025, including more stock options, at a time when the company reported a substantial net loss and less than stellar stock performance. This disconnect between pay and performance is definitely something to watch. While the company has plans and a structure in place for governance, including independent directors and an audit committee, the financial results present a clear challenge. The focus on bringing in financial expertise with Messrs. Pellegrino and Cole, combined with the increased executive compensation, suggests a push towards financial recovery and growth. However, the significant net loss in 2025 and the pay increase for executives when the company is in a tough spot raises questions about shareholder value alignment. They are clearly trying to incentivize their leadership to turn things around, but the market's reaction will be the ultimate judge. Overall, Precision Optics Incorporated appears to be in a period of strategic repositioning, with an emphasis on experienced leadership and financial oversight. The key will be how effectively this new leadership can translate into improved financial performance and shareholder returns, especially given the current loss-making status. Alright, that is our breakdown of Precision Optics Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the executive pay increase is justified given the losses? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to join the conversation on our Discord, linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.